Hello and welcome everybody to today's Fed Week session number 3, which is on digital currencies. We have a very distinguished panel of speakers today from the Federal Reserve to discuss technology and payment aspects related to a potential digital currency. As well as we all know, we're awaiting a forthcoming research report by the Boston Fed in collaboration with MIT next month. So this is very timely. Moreover, we are also very pleased to be joined today by Congressman Bill Foster, who recently introduced legislation directing the Fed to study and issue a report on central bank digital currencies and make recommendations to Congress on feasible models. I'm Patricia Haas-Cleveland, U.S. President of OMFIF, and I'm delighted to welcome you to what we expect will be a very interesting discussion of wide-ranging but informed perspectives on a potential digital dollar. Before we begin, just a reminder that today's discussion is on the record, and we very much welcome your questions after the panelists have made initial remarks. So please enter them in the chat box on your screen. Now I'd like to introduce Congressman Foster. Congressman Foster, thank you so much for joining us today. You are a member of the House Financial Services Committee, as well as a physicist and entrepreneur with a very distinguished track record in both fields prior to serving in Congress. You have been focused on the importance of exploring a digital dollar, a central bank digital dollar, for a very long time. It was certainly top of mind when we met nearly 2 years ago when you wrote Chairman Powell and asked if the Fed was indeed prepared for the rise of digital currencies. And since then, this topic has only gained in greater urgency and intention. So we'd love to hear from you about what is your motivation, what fueled your interest in a central bank digital dollar. You were way ahead of the curve, at least in the US, in zeroing in on this. And we'd love to hear a little bit about the bill that you and Congressman French Hill introduced, the CBDC Study Act of 2021, and what you're hoping to see from the results of your efforts. So thank you again very much, Congressman Foster. Over to you.
Well, thank you, Patricia. I appreciate the ability to speak to you about this. Well, just the first observation is that we have to answer China on central bank digital currencies. Representative French Hill, who is, I think it's fair to say, my favorite Republican in this operation, he and I have been pestering the Fed and Treasury, as you noted, for years on this. COVID has also moved this discussion more to the center stage because of the utility of things like Fed accounts for the distribution of stimulus, which is one of the many potential applications of central bank digital currencies. And it's really very good that we're finally seeing motion by the Fed, which you mentioned, and we're very much looking forward to the Fed's white paper this summer. The response to China can be either unilateral or multilateral. The Trump administration has had very much a USA first, China bashing, approach to things, which was inherently limited in its effectiveness. The Biden administration, to its core, is much more multilateral. And this is an approach which I think is really an opportunity for them to reassert leadership of the free world. The endpoint that I'd like to see is not just digital dollars, but a network of interoperable, privacy-preserving central bank digital currencies among the free democracies of the world. And crucially, this is going to require international credentialing of authorized, legally traceable participants in central bank digital currencies. I believe this should be possible to negotiate among the free democracies of the world, and negotiating this, and at least starting those negotiations, should be a high priority of the Fed, the Treasury, FinCEN, the Biden administration, all hands on deck. The primacy of the dollar as the preeminent reserve currency is, I view, really as a separate argument, a separate discussion. I believe it will be preserved, not primarily by the use of digital dollars in day-to-day transactions throughout the world, but by the Fed's willingness to stand behind dollar-connected economies of the free world with things like swap lines to other central banks in times of crisis, the Treasury market intervention during the worst of the COVID crisis, and so on. Now, for central bank digital currencies, there are really two important decisions that you have to make. Whether or not you decide to use blockchain or another, just in a simple account-based system. The first decision you have to make is the central bank digital currency going to be anonymous or not? And specifically, is there going to be a trusted legal system that allows you to unmask participants as part, well, either as part of a legally authorized investigation based on probable cause, or possibly for surveillance purposes? And cultures will differ significantly on this last possibility, the level of surveillance of not otherwise suspicious transactions that people are comfortable with. If you choose that it's not going to be anonymous, you need to have an internationally interoperable system of secure digital ID for participants. The participants must be legally traceable, and this means we need international understandings about sanctioning and potentially extraditing criminals. And I believe this should be possible among the free democracies of the world. This is actually the issue that tripped up Facebook Libra proposal, where they were really talking out of both sides of their mouth on the issue of anonymity. The Libra Association said that it was going to have a permissionless blockchain that would allow self-custody of assets. And then Mark Zuckerberg came in front of our committee and said, no, they were going to obey all of the KYC and AML rules. But both of these statements cannot be true, and which is, I think, ultimately the downfall of the Libra project. Now, the second design decision that you have to make is, are all transactions final? Or is there a court system or a trusted third party that you can go to reverse fraudulent, criminal, or mistaken transactions? For example, if someone drags you into an alley, puts a gun to your head and says, get out your cell phone and transfer all of your crypto assets into my account, is there a court that you can go to and argue that the transaction should be reversed? For Bitcoin, for example, the answer is no. And that is why Bitcoin billionaires often go around with armed guards protecting them. This is not the way most of us want to live. But if you decide that you need a trusted court system as a backup, then in the case of blockchain-based systems, that means that the court that you trust has to have access to a heavily guarded cryptographic key that gives it basically a digital backdoor to nullify and reverse transactions on the blockchain. Now, I've just said about 3 things that drive the Bitcoin purist ballistic. But if you decide that you want a court system capable of reversing fraudulent or mistaken transactions, it is a technical necessity. And then once you've accepted the necessity of a trusted court system and its associated digital backdoor, then you have to ask yourself, what exactly is the value added for the blockchain? And for this reason, I think it is more likely than not that initial central bank digital currencies implementations are going to be simple account-based systems rather than blockchain-based, which is indeed the decision that China has made. And now the final point I want to emphasize is the centrality of secure digital ID in this discussion. The problem of ransomware alone has made it crystal clear that anonymous central bank digital currencies are not going to be acceptable. Chair Powell and Secretary Yellen have made this crystal clear in response to some of my rather direct questions during a hearing in late March. So the secure digital ID that's a necessary precondition for participating in CBDCs they must be legally traceable. They must be unique so that people cannot operate multiple identities in multiple jurisdictions. So that means you have to biometrically dedupe people to make sure that you're not operating multiple identities. They have to be maximally privacy preserving, and there's a lot of good technology out there that allows you to turn over only the minimum amount of information necessary to make the transaction without turning over all the other information about exactly what it was you purchased, where the transaction was, and so on. All of this data China is collecting on transactions of its central bank digital currency, which is one of the reasons I think it's going to be a non-starter in a lot of the free world. And it also has to be interoperable internationally. And this is going to require very delicate international discussions to prevent people from operating multiple identities in multiple countries, which means you have to biometrically dedupe your lists just remove duplicates from your list of participants across international boundaries. And this is not going to be well loved by the tax cheat lobby. You need also agreement on the sanctioning regimes, because I don't think anyone wants drug dealing oligarchs transacting in digital dollars or digital euros. But I doubt that we'll ever agree with the Chinese that the Hong Kong protesters of remembering Tiananmen Square are terrorists that should be sanctioned. And so there are going to be delicate discussions there among the countries that participate. And we're also going to need international agreements on things like witness protection programs, which is essentially government sanctioned identity fraud. And I think that our country would be very hesitant to turn over our list of former Russian spies over to Vladimir Putin. And this will require countries like the US and UK to resolve their hesitancy over national ID systems. In the US, there's been real progress on this. There's the Real ID system. It's scheduled when it is finally rolled out to be very close to a de facto national ID system. It's issued by the states, but it is deduped nationally so that you will have one and only one real ID possible in the US. And it's going to be required again on airplanes. Interestingly, there are ISO standards that were negotiated by the National Institute of Standards and Technologies for digital driver's license or mobile ID, which allow people to use that real ID to authenticate yourself online. And that will be transformative to reducing identity fraud, which is a plague on everyone who's connected to the internet these days. So those are the big issues that I see. And I think a lot of Congress sees in the rollout of central bank digital currencies. We're all looking forward to the Fed's white paper this summer, and I'm sure we'll have comments.
Thank you, Congressman Foster. You certainly covered an awful lot of ground in those remarks, but very, very important points. I think the three key points you made about sort of the technology and the design, whether it'll be blockchain or anonymous and account-based, the importance of making a decision about whether you have recourse to courts to reverse these transactions, and digital ID, and what all of that means as a CBDC is considered. Clearly, the process right now is about exploring all those factors that would impact a CBDC, and you've certainly laid an awful lot out there. Just from your perspective, obviously, since you've introduced your legislation in March, asking the Fed to issue a study paper and make recommendations, Chairman Powell has indeed come out and said a study paper will be released, will be prepared and released. And I know one of our panelists, David Mills, will comment on that. And as you said, and I said, we will have also the paper from the Boston Fed. How do you see this unfolding going forward? You've obviously already given a big nudge to the process. The US is now indeed considering this seriously, looking at these issues, which are complicated, both from a technical perspective and a policy perspective. What's your sort of desired outcome and timeline around this?
Well, I'd also like to tip my hat to Christine Lagarde, who from the very time she took control of the European Central Bank, highlighted this as one of her priorities. She's got a lot of respect in Washington. And I think the fact that the specter of having China and the EU move with the US falling behind is just, that as much as anything, sort of tipped the balance. I think the Facebook Libra was a turning point also, where everyone saw the defects of just letting business handle everything. That this, it was viewed. I think the sensitivity, particularly of the digital ID, is something that's really at the heart of this, and to an extent people don't appreciate. It was just last week that Apple rolled out, maybe the week before, that Apple rolled out a digital ID product, very much like a mobile ID, and may in fact be compliant with the ISO standards on this. Android had become involved in this. And so what these are is that they're methods to transfer all the data on your ID card, your real ID card in the US or other national ID, you transfer it to your cell phone. And then you take advantage of the capabilities of a modern cell phone to identify its owner. So in the combination of registering yourself, your driver's license, and your cell phone as a single sort of legally traceable identity gives you a very powerful second factor to authenticate yourself as a single legally traceable person online. And when I think traditionally, anytime that you talk about anything that resembles a national ID card, In the United States, you sort of have the ACLU jumping down your throat from the left, and then you have all of the Red Dawn people, if you understand the reference, jumping down your throat to the right. But I think the conversation has moved, and the public is well ahead of the politicians on this. You know, we understand that there are these big databases that know everything about us, and we understand that under some conditions, the governments can get their hands on those data about us. And on the other hand, we want the average member of the public just wants the system to work, and they're sick and tired of having to swap out their credit cards every time someone steals their numbers. And so this is and so I think it's getting rid of identity fraud that I think is one of the highest priorities here. And in fact, if you get rid the real life fear about privacy is really having someone impersonate you online. That is a much bigger real life threat to your privacy than, you know, nebulous worries about big databases, which exist and will exist. And so I think that the public has really moved on this, and that they're going to be very popular. Certain states are rolling out these mobile driver's licenses that allow you to assert your digital identity. I think they're going to prove tremendously popular. Our office is actually trying to get them incorporated into the infrastructure bill, where one of the bipartisan areas of agreement there is to give essentially universal broadband access to everyone in the United States. And so if bundled with that guarantee of basic access to the internet is a digital driver's license or a mobile ID that will allow the 30 million Americans newly connected to the internet to protect themselves from identity fraud. It's going to be a very important part of this. The costs are small, the benefits to just operating costs to business and to the government are enormous.
Well, I think as often as you would know more than anyone in the case of science, you can often start out working on one problem and it can lead to something else. And clearly the whole focus on central bank digital currencies, which initially came out of a desire to improve the payment system, even Facebook, I think, was initially trying to improve payments across borders, has led to a real focus also on digital ID. And I think that's also something that's coming out of the work that's going on at some of the Federal Reserve banks that are exploring this. Congressman, we are very cognizant of your time, and the clock is ticking, and we've reached the end of your remarks. But thank you so much. You have given an extremely enlightening and comprehensive backdrop to the discussion on central bank digital currencies. And certainly, again, your efforts have been such an important part in moving this discussion and conversation forward. So thank you for that, and thank you for joining us today. And with that, I'd like to wish you a good day and turn over to the rest of our panel to try to follow in your footsteps, at least on the sorts of issues and complexity of the discussion that you've raised. But thank you very much for your time and your remarks.
Thank you. I'm off to my hearings now.
Great. Thank you so much. So turning to the panel, I think we can all say that Congressman Foster's remarks provided a very robust backdrop to our discussion today. And obviously our discussion today is not to talk about what decision the Fed should make on whether or not to have a digital currency, but to look at some of the more technical aspects that would be involved in the decision-making when we get to that. Obviously, we are pleased to hear that the work is proceeding, and all three of you have been very involved for years on the topic of a digital currency and many of the issues related to it. So I'd like to just introduce the three officials from the Federal Reserve who have been engaged, as I said, in different technology, design, or payment aspects which are relevant to a CBDC. Jim Kuhnham is Senior Vice President, Secure Payments and FinTech at the Federal Reserve Bank of Boston. And as we've mentioned, he's been leading the design and tech research on a CBD project, Project Hamilton with MIT, which will be released in the coming weeks. Anton Martin is Senior Vice President, Money and Payment Studies Function at the Federal Reserve Bank of New York. And David Mills is Associate Director, Reserve Bank Operations and Payment Systems for the Board of Governors. So welcome, everyone. To start, I'd like to turn to Antoine. Antoine, we've heard from Congressman Foster on the many reasons, both sort of strategic and geopolitical, about why we should indeed pursue a central bank digital currency. But if we just take a step back, whenever anybody's going to create something and step into a laboratory and say, okay, I want to design something, they first have to say, what am I trying to solve for? Is there a problem that needs to be fixed? So if we take a step back, we'd like to hear about that. Certainly, as I mentioned previously, one of the issues that we saw was that there was a lot of dissatisfaction with the payment systems, that they're not as fast, efficient, or as inexpensive as a lot of people would like them to be. So I guess one question is, could CBDCs be a partial solution to that? And is there a practical case to have a central bank digital currency? So please tell us what, if we step into the lab, what are we trying to solve for here?
Right, thanks. So let me start by saying that these are going to be my own views and may not be the views of the New York Fed, of the Federal Reserve System, and I'm pretty sure that applies to my colleagues as well. And so, yeah, what I want to talk about briefly. So one thing that's sometimes missing in discussions about digital currencies or central bank digital currencies is an explanation for why this digital currency is the best solution to the problem that you're trying to solve. And so I'm going to argue that it's actually very difficult to know if a CBDC or a digital currency would be the best solution to a given problem, in part because it's not completely clear what such a digital currency is or does. And I think this is very consistent with the remarks of Congressman Foster, who sort of gave us different options, but it's not clear what the best option is. So clearly we need to do more work to have a clear understanding of what a CBDC is or does before we can go further into that. So what I'm going to do is I'm going to first give you sort of a brief overview of a potential approach to solving problems, and then I'll try to apply that to a CBDC to get a sense of where we are. So, okay, so if we're trying to solve a problem, so as you just said, we want to clearly identify what the problem is. Then we want to think about what tools we have that are available to potentially solve that problem. And then we want to pick the best tool out of our options. So how does that apply to digital currencies or central bank digital currencies? Well, there's been a number of potential problems that people have argued a digital currency could solve. So people have talked about modernizing the payment system or lowering the cost of payment. People talk about financial inclusion. In some countries, one of the motivation is to provide an alternative to the disappearance of cash. This is one of the motivation for the Riksbank to study CBDC. In other countries, the issues is to provide an alternative to private sector offering. That's part of the motivation for the PBOC. And there's a number of other potential problems that people have argued could be solved by a digital currency or a central bank digital currency. Now, in all of these cases, there are alternative ways to address that problem potentially than having a digital currency. So for example, if you think that you're trying to improve financial inclusion, in principle, Congress could write laws that require banks to offer basic checking accounts at no cost or low cost and without fees. Now, I'm not advocating any policy proposal, but this is just one example of something that could potentially be done that could help address the problem without issuing a central bank digital currency. If you want to improve the existing payment systems, for example, by modernizing it, then the Fed is building FedNow, and FedNow will support faster payments, which have a lot of benefits that could resemble some of the benefits of a digital currency without being the introduction of a central bank digital currency. So those are like at least two approaches that one could think of, the legal regulatory angle or the modernizing the payment system without introducing a digital currency that are potential options. So the question is, between those, potentially others, and CBDC, what is the best tool? And as I mentioned at the start of my remarks, it's difficult to determine if a CBDC is the best tool, in part because it's not completely clear what a CBDC is. So I'm going to run through some examples. So Congressman Foster already provided some really interesting example of options that one could have. I'm going to start with like a very simple and high level one. Should a central bank digital currency be a central bank liability? So some people have said, well, of course, that's the very definition of a central bank digital currency, is that it should be a central bank liability. But it's actually not clear why that's important. So for example, some of our colleagues at the IMF, Tobias Adrian and Tommaso Mancini Rifoli, have argued that you could build a synthetic CBDC, which is a digital currency that's fully backed by reserves in a central bank, by balances in a central bank account. Now, that's not a central bank liability, but it has a lot of properties that are very similar. So is it important for a central bank digital currency to be a central bank liability, and why? And so just as an example, the People's Bank of China's DCEP is not a CBDC, is not a central bank liability because it resembles these synthetic CBDC that our colleagues talk about. So that's one important question, like why should we care? What is important about this particular design feature? Congressman Forster talked a lot about protecting privacy, and I think that that's a really important consideration. Now, some people think it's very important to protect our privacy from, say, private sector institutions. And that seems like a reasonable perspective. Other people think it's very important to protect our privacy from the government or the central bank. And so those are other really important decisions to make. And it's really not so clear how a CBDC would protect our privacy and from whom. Congressman Foster already mentioned the issue of whether it should be on a blockchain or not, whether it should be permissioned or permissionless. And one other thing that he didn't talk about, but it's potentially interesting, is whether it should be programmable. So all of these dimensions are incredibly important in the design of a central bank digital currency, and we really don't know what they are. And because we don't, it's difficult to know if a CBDC would be the best solution to anything we do. So this is why it's very important to do more research, both on the policy front and on the technology front, and my colleagues will talk more about that. And I'll just conclude by, as Chair Powell said, say that it's more important to get it right than to be first. And so we need to first get a better grip of some of the answers to the question that I discussed before we can make decisions.
Great, thank you so much. Antoine, I have more questions for you, but I'm cognizant of the time and we already have a lot of questions coming in from the audience. So I'm going to continue on with David, and then I might come back to some of my other questions. But that was very useful to sort of give the lay of the land of the landscape and what some of the issues are, and to point out that it's not 100% clear what the right and best way forward is. I would say there's probably critics out there that would argue FedNow is a great way to, as you say, modernize and improve the existing payment systems. That's due out in 2 years. There's probably folks who would say that's too long. We need something now. We've been waiting. As Congressman Foster alluded to, the private sector is moving quite quickly, and there's a desire to sort of see the public sector catch up and making decisions and moving in this space as well. Let me turn to David Mills from the board, who I'm sure will play a leadership role in this consultation paper that's coming out. And I wondered if, David, I was going to mention some of the things going on internationally. We know that over 86 central banks are exploring a central bank digital currency. China has obviously issued one. Things are happening. El Salvador has now approved Bitcoin as legal tender, which is an interesting development. So obviously there's a lot of going on in internationally. I know the US is collaborating with the BIS. Tell us a little bit from the broader perspective of some of the things that you think are important and your thoughts on some of these policy issues that also have been referred to, and certainly that Chairman Powell has mentioned in the spirit of trying to get things right, because obviously monetary policy, financial stability, consumer protection, legal privacy, these are all issues that surface. So is all of this going to be solved and laid out in your paper that you're doing. Tell us a little bit about what you're thinking. And another question, just I'd be curious about is, once you've addressed all that, how do you see a CBDC, if it's decided to go forward, coexisting with some of these other private sector initiatives around cryptocurrencies and other private currencies? So please let us hear from you on some of these points.
Sure, thanks. And I will also make my usual disclaimer, as Antoine did, that these are the views of my own and not necessarily those of the Federal Reserve Board or anyone in the Federal Reserve System. So I got that out of the way as well. So there are a lot of questions there. And maybe I'll just start a little bit on the international front. And just kind of level set a bit. Antoine gave a good overview of like questions around the demand, what purposes, what use cases could this solve? What are the other range of tools that both the public and the private sector might have to solve these problems without a central bank digital currency? I think are important questions. And to your point, one of the things that we observe in the payment space, and that's kind of where first and foremost I've been sitting for a long time, is that you are seeing a lot of radical change, I would say, and that change is happening not just domestically in the United States, but globally. And that change is really aimed at trying to fix certain pain points or frictions in various payments ecosystems. So some of these frictions are long-standing. There are known frictions in the cross-border markets. There are known frictions even domestically in some of the high cost of certain types of payments activities, whether at the point of sale, online technologies, et cetera. And the pandemic itself has also pointed to a need to increase the general population's interest in increasing use of electronic forms of payment. So I think a lot of the recent experience from the pandemic has brought to light on that demand side a bit the interest and acceptability and the more common nature of electronic payments. And so there are a lot of conversations about what's next. What's that future set of payments look like? And so that's where you see a lot of this monumental change going on in terms of, I would put it in three categories. In terms of infrastructure investments, so like FedNow is a primary example among others of investments in infrastructure to improve the speed, the efficiency, transparency, lower the cost of various types of traditional payments mechanisms that we have today. You also see a lot of innovation by different types of entities and market players. And in that case, you see some firms and big tech firms trying to disrupt the market of financial services. You also see a lot of startups and small players that gain some traction in terms of disrupting the payments ecosystem. And you also see a lot of like maybe partnerships, a lot of just different players on both on the IT side, the user interface side, leveraging new technologies on the back end. So there's just a lot of innovation that is taking place both at the infrastructure and the entity level, raising new questions about what the future payments ecosystem might look like domestically and internationally. And then the third big thing I think is, and this kind of gets to the central bank digital currency, is the third type of innovation is really on the asset that's transferred. So the sort of the money-like asset. And here you have, what had been a relatively stable ecosystem of central bank money, like physical currency or reserves that banks might hold at the Fed, and commercial bank money that a lot of folks might use to access electronic payments through their own bank account relationships. And so what you're seeing today is like even more push around new types of ways to pay, leveraging new infrastructures like distributed ledger technology that create assets that don't quite fit neatly into that ecosystem of central bank and commercial bank money. And so you're kind of left with this sort of question about, how do we revisit what we've taken for granted for decades at this point, which is that relatively simple ecosystem to one that's becoming increasingly more complex on the asset side. And so when you get to the international discussions around central bank digital currencies and the future of money more broadly, usually the central banks have a lot of common ground on first principles. And we all as central banks have mandates related to monetary and financial stability, safe and efficient payment systems, and also providing adequate measures to protect confidence in the currency. And by currency, I mean more the US dollar in our case, but equivalent currencies in other jurisdictions of central banks. And so what we're seeing in the payment space internationally is some challenge to our assumptions about what the ecosystem might look like. We have to understand what kinds of questions this might impact from a financial stability point of view and from a monetary stability point of view. And that's where this future of money and the qualities of money and the qualities for transactions are part of this broader story. And so central banks have been heavily engaged in trying to understand this broader ecosystem, as well as try to focus a bit on what role is there fundamentally for central bank provision of the unit of account or the store of value, or the traditional functions of money we often hear. And so that the Fed and many of our colleagues around the globe and other central banks have been investing a lot of time and energy to sort of begin to clarify, get hold of, and understand the varying nature of this landscape and how a central bank digital currency could complement or enhance or provide those foundational principles around money and financial stability and safe and efficient payment systems. And so for that, we've been engaged in a number of work streams that look at a range of issues on the policy side. So one is just kind of clarifying the roles, the fundamental role of money, the fundamental qualities of money, and how sort of the new innovations kind of play into that intersection. Are they good things? Are they bad things? Do they fall out of the perimeter of our regulatory authorities? Is a central bank digital currency a solution to that? If it is, what are some of the issues that we need to think about? So we have to think a bit about its implications for financial stability, its implications for how it might impact our current more stable financial services ecosystem, where we have a relatively straightforward network of financial institutions who are microprudentially regulated for safety and soundness, that are providing fundamental services on both the payments and lending side. And so we have to think about those issues. We have to think about the impact that it might have on monetary policy. But anything that's built, anything that could be leveraged, we also have to be mindful that there are a lot of challenges underneath the hood. Antoine sort of suggested there are a lot of different design elements, how you deal with illicit financial activity and making sure that anything that is built is robust to being able to comply with those obligations are fundamentally important, as well as privacy. I know we've talked about privacy, but it can't come at the sacrifice of illicit, in terms of relaxing or making it harder for us to prevent illicit financial activity. So there are these delicate decisions that are from a policy perspective very important, because they are sometimes competing priorities. And then finally, I think the big thing is security, cybersecurity, risk to infrastructure. How does sort of a central bank digital currency coexist or operate alongside existing platforms? Can a central bank digital currency utilize existing platforms? Does it need its own platform? There are a lot of design questions that are important for us to be considering as well. So all this is to say, in concept, it sounds simple and straightforward enough, but there are a lot of things once you start to unpack the elements that you have to consider in terms of what a central bank digital currency can and cannot do, and what role it should play. There are a lot of deliberations and conversations that we need to have. And maybe that I'll just sort of leave with the goal of our discussion paper that we plan to issue later this summer is to really begin that kind of conversation with the general public, to try to really understand a bit more folks' perspectives and reality, perspectives around the future of payments from their side, the types of enhancements that would be valuable, the types of costs or reasons not to do it would also be very important for us. So we really want to begin a dialogue with key stakeholders, the general public, our colleagues and other agencies, and really kind of get a collective view of some of the broader implications that a central bank digital currency and other types of digital assets might have if as we think a bit about what the future will look like. So with that, I'll stop.
David, thank you. That was great. And it was also very interesting to hear not only all the issues that we're focused on sort of domestically as a country. And when we think about this, has all been about the question of should the US have a digital dollar. But when you put it in the context of what's going on internationally, we realize that if we just do something in isolation, we're not going to be in sync with what's going on elsewhere. And the whole question of interoperability, cross-border, and I think the points that Congressman Foster made about a digital ID, there has to be alignment. They're international standards. You want to be at the table. So it's really now moving on both fronts, domestically and internationally, to try to answer some of these questions as we look under the hood. I also have a lot more questions for you, but I'm going to turn to Jim because everybody is sending in questions rapidly, and I want to be sure we get to them. So Jim, you're going to solve all of this. You've been looking at the design, and I know your focus is indeed more on the technology. So we're thrilled to both have a consultation paper coming out of the board, which will look at some of these broader issues and policy considerations, but we're also looking forward to the results of your project with MIT on the design side. So is there anything at this point in time you can share with us about the different technologies and infrastructure you've been looking at and considering? And is there, is there anything either from the sort of sophisticated side to the simple side that you can share with us? How will a CBDC work? Can you walk into your corner drugstore and buy a Coca-Cola with it? I mean, take us from one end of the spectrum to the other, to the extent that you can, on how you're looking at this point in time from a technology perspective.
Sure, thanks, Patricia. And I'll follow the lead and say these are my thoughts, not those of the Federal Reserve System or Federal Reserve Bank of Boston. Yeah, so what we're doing is technology research. So, at the very simplest, if we decide in the future that we want to issue a CBDC or Congress dictate it, and we're not doing technology research, we're already 2 years behind as far as understanding what's possible. So we have a couple of tracks of work in what we call Project Hamilton. And the real motivation is to understand what's possible. So the first track, as you mentioned, which is with MIT, is that we are building a research model to understand what's possible. Now, as Dave mentioned, we don't have policy decisions yet because we need to have consultation and deep discussion. And so we're building a system that's flexible enough to handle different policy options. It's like building a house without a plan. We are looking at different ways of trying to solve the problem. So we have two phases of work. The first phase is to build the core clearing and settlement engine. So the actual minting of the money, the storing and moving of the money amongst holders. And if we can't build something that goes fast enough and is secure enough, then we have no reason to go further. So with some very challenging metrics, tens of thousands of transactions per second, settlement and clearing and settlement in under 5 seconds, and a very robust infrastructure because this has to be available 7x24, 365. And it can't go down because the data center crashes or because of a network outage. So we're looking at the resiliency of the platform and also some aspects of privacy. And so the goal there is we're working jointly. We are coding and designing and testing the platforms. We'll actually have multiple platforms because this is research. You want to compare it against other options. And the goal is to issue a white paper, as you mentioned, but also an open source license for the code. We want others to learn from what we're doing here and not just do this for the Federal Reserve's perspective, but also to help others learn. And we think that the technology learnings will be broader than just even CBDC. Now, you mentioned July. We don't have an exact date. What we said is third quarter, and as soon as we can issue it. So we don't have an exact date, but we'll be working on that, and it will be issued within the third quarter of the year. Then we'll move to other research with them. We'll be coding other things after we get that core engine built. And we'll be looking at different policy options. Now, I just said we don't have answers to those, but what we're going to do is look at some of the thorniest policy options and determine what we can code and test. Now, some of these policy options actually can be in conflict with each other. And we've mentioned the premier one, which is privacy versus traceability. How can we maximize privacy, which I think everybody would say is a good thing? And I don't mean anonymity, I mean privacy. But how do we catch the bad guys? And so what we'll be doing is looking at different ways of approaching that problem, coding different ways of doing it, and see whether we can both maximize privacy and still catch the bad guys. And Congressman Foster even alluded to this, that there are new technologies that may allow us to do that, catch the bad guys, but still have maximum privacy. Now, we always say that policy informs the design of your system, but in this case, the technology may be able to inform policy by making new things possible and not presuming that how something is done today is how it should be done. I always say in Boston, we have a saying, don't pave the cow paths, because if you do, you get Boston roads. So we should be looking different. Plus, if we do end up issuing a CBDC, it's not just for the next 5 years, it's for the next 100. So our whole goal here is to be flexible, both for the policy options that come, but also for change. I mean, just look at GDPR and the change that made to the systems in the EU. We don't want to have a policy change or a change of norms make our system already inherently out of date before issuing it. So that's the goal. We are technology agnostic, so we're looking at all technologies. The second track I'll touch on briefly is, this is the Fed Boston itself. We're looking at 40 or so different platforms to understand what else is possible. Antoine made a great point about, what are the possibilities? It's not just one solution and implement it. There are many possibilities here. So we're looking at both open source blockchain solutions as a possibility, but also private sector actors. There are companies out there that say they've built something that can support a CBDC for the US, a retail CBDC. So we'll be doing a comparative analysis among many of them, and then possibly bringing in 3, 4, 5 platforms to test. Can they really meet the needs? And that way, between the work with MIT and our comparative analysis, we think that, within a year or two, we'll have, a relatively robust understanding of what's possible technologically. And then from there, act depending on what the answers are. So let me stop there.
Great. Thank you so much. I want to just go back to one other issue in the process of looking at a CBDC that's emerged, that Congressman Foster spoke of, and also that you mentioned, and that is digital identity. Can you just touch on that briefly as to why that's important based on the work that you've done and the different technologies you're looking at?
Yeah, I mean, a digital identity would definitely make a CBDC a simpler thing to build, because you'd have that base. We don't have that in the US, at least not in a full ubiquitous way. I'm not necessarily, lobbying for that, but you have to, if you're going to have a non-anonymous CBDC, then you need to have some way of identifying who's the holder. In our case, we're relying on public key cryptography, but based on the decisions about how it's distributed, the identity could be held by intermediaries, banks or others. So right now we're, like I said, just looking at the core layer of it. We don't have a national identity, so we're looking at what is traditionally used in some of the leading digital currencies, public key encryption. And then from there, the policy choices, and then how we distribute it, what intermediaries are involved. We'll get into how is the identity set and how is that data protected.
Great. Okay, thank you. Thank you so much for those remarks, Jim, and good luck with the report. We're all very excited to see it come out at some point in the third quarter. I'm going to turn to the questions that have been streaming in. The first one I think is of interest to a lot of folks out here, and that is, do the Fed and or the Treasury have the authority to create a digital dollar? Or is it a congressionally approved requirement that it comes from the Congress? Do you have, who wants to handle that? David, is that in your remit sitting there down in Washington?
Well, I have a high-level answer. I'm not the lawyers, the legal team, so I won't be able to give you the best answer. But the Federal Reserve Act, it was written back in what, 1915, 1913, 1912. And so it was written with very specific references when it came to currency with paper. And so any sort of digital representation of the dollar might require some kind of act of Congress to amend the Federal Reserve Act to broaden a bit of the scope of the capabilities. So it's not immediately obvious that the Fed could necessarily invoke its authorities under the Federal Reserve Act as currently written. So I think that that's one thing that is important. And the second thing, I think when you talk a bit about a central bank digital currency, whether we're talking about the Treasury or other federal agencies, there are a lot of public sector stakeholders when thinking about central bank digital currency. And the Treasury, of course, is one to meet their remit, but there are other certain interests as well. If you think about all the types of impact it can have on the financial sector, you know, the markets regulators, the bank supervisors, you know, there's interest, of course, from national security and consumer protections. So there's there are a lot of stakeholders at play. And again, part of the goal of the discussion paper is to elicit a lot of early feedback from a number of not just private sector entities but public sector entities as well on the kinds of things that are of value to them and important to them. So so that is that's all I guess I could say on that.
Does anybody want to add to that, or I invite you to comment on any of the comments you each have made? So
I'll make one comment, Patricia, and this is not about the legality because I'm a techie payment guy, but Antoine and Dave both talked about this, and even Congressman Foster's. You know, this is not a single thing in a vacuum. You don't build a CBDC and say that all it is replacing money, or it's just a payment system, because it is part of a very complex, you know, system of systems. You know, the payment system itself is complicated. Banking is complicated. Identity. And so, you know, Dave made the point, but I'll just reinforce it, that this is a really building something which is a system of systems, and not just even in the US. It has domestic and international implications. So I think, you know, to say that this is a simple build of a technology is, you know, naive, or to say that it's just a US question is also naive. So I think that's an important thing to remember in all of the discussions we have.
Yeah, and if I may quickly rebound on this point, Patricia, you mentioned earlier the comments by Bill Foster on digital identity versus CBDC. And I think it's important to recognize that if we had, and Bill touched upon that, if we had a digital identity, it would change the way it could change the way we think about digital currency and the necessity for it to be, say, a central bank digital currency, because there's some substitutability between the two. And so it's important to keep those things separate, or to keep in mind that both are important. And as Jim said, as part of a complex system, having one might change the way we think of the other.
Yeah. And I just want to go back to a point that Dave made, which is that there are a lot of stakeholders, a lot of folks or players involved in the discussion and the consideration, because related to that question that came in is also the question of, is there regulatory clarity on digital assets? Is regulatory clarity on digital assets a prerequisite? And we know that, and that perhaps falls more into the purview of the different market regulators. And clearly this is something the SEC, the OCC, and the CFTC are looking at with regard to digital assets. But it just goes to show that there are many, many stakeholders. This is not just one simple topic in question. So hopefully these will be tackled too. This leads to another question, which we touched on earlier, which is coexisting with other cryptocurrencies. So the question is, what might be the impact of a CBDC launch on private competitors such as Facebook DM or Ripple's XRP? Does anybody want to take a chance with that?
Well, I'll make a few comments. We see it as complementary. We don't see this, first of all, any payment system is in some level of competition with others. That's just the nature and the fungibility of some of these, as Antoine mentioned, is not one solution. But the goal would be it's complementary. And if we did release it, it's to provide maximum choice for consumers and businesses and the government itself as to how they do it. Dave mentioned the work of a number of central banks under the BIS, the Bank for International Settlement perspective. And one of the guiding principles there is interoperability and coexistence. So we see that this is not about replacing cash or replacing a certain payment system or a certain cryptocurrency or stablecoin. There'll be some natural competition, but it's not about replacement. It's about coexistence as a goal.
Great. And indeed, we actually had a number of comments come in on that. So that is a big issue of concern. And I think in general, there has been a concern, is this going to be open for collaboration with the private sector? Or is this, could there be a case of competition or sort of keeping out the private sector? So it's great to hear that this will be complementary.
Yeah, I'll make one more point on that, Patricia, if I could. I also see the potential, if it's built right, for a CBDC really to be a platform for innovation. We don't see this as stopping innovation. We think the CBDC itself could be innovated on top of to create services for the unbanked or financial inclusion. So I think the innovation will only grow from the issuance of a CBDC if done right.
That's great. And actually, I think that one of the questions, and maybe this is too specific, but one question is, which blockchain ecosystem do you see CBDCs being run on? Again, Ripple, Stellar, some of these other ones. And maybe what you're saying is you see a CBD system that others can build on, but how do you see, just going one step further, about coexistence?
I'll say, we're agnostic on what technology is used. To presume that blockchain is the right answer, I think, is the wrong way of approaching it. Blockchain is still relatively new, it's growing, and there are pieces of blockchain, I think, that have merit and can potentially be a platform or a piece of a platform. But we're not presuming that any one, especially if you look at, an economy the size of the US, we're looking at tens of thousands of transactions per second, and that's before you even consider the possibility of micropayments or IoT payments. So, at this stage, most blockchains are limited, especially permissionless. So I think it's potential, but I don't think that's necessarily the right answer.
Okay. Let's step back to the global stage. Question: in addition to the US, the EU, Bank of Japan, PBOC, how many central banks do you think will have the infrastructure to issue and manage digital currencies?
Well, it's a good question. This is a very rapidly evolving space, as you know. I think a lot of it just depends on design choices and implementation. As Jim was just kind of saying, there's a whole range of ways that this could be implemented, from very simple, straightforward, familiar infrastructure to something that's completely different. And so I don't know that technology is necessarily a barrier for any central bank to build a central bank digital currency out, especially if it's leveraging a lot of existing payments infrastructures. But as Antoine was sort of suggesting, a couple of models where it's a liability of the central bank, but it could be distributed by the traditional banking sector in a certain way. How do you do that? The details would matter, but as Antoine referenced an IMF paper that sort of suggests one way to think about it. Whether you call that a CBDC or not is debatable to me at this stage, but it does point to different ways that a central bank could implement some enhancements to a central bank digital currency in ways that are relatively leveraging existing tools and techniques. So I don't see that being a barrier. I do think that there is a lot of interest. I know that one of the committees over at the BIS, the Committee on Payments and Market Infrastructures, routinely surveys a lot of central banks about what they're doing in the space. The number keeps growing. So, but it can range from just preliminary research to advancing dialogue or building out prototypes. I think most people are in the more conceptual phase, but there are a lot of central banks in that conceptual phase at least. So I do think you're seeing a lot of attention globally.
And related to that is another question that if CBDCs are going mainstream globally, what would be the best international institution for setting up interoperability solutions?
You ask a very good question. I think that's also open to debate. I think some in the international community see an opportunity to think about how central bank digital currencies could sort of be an impetus for better and increased organization around improvements in cross-border payments. We do have internationally a broader, outside of central bank digital currencies, a broader effort in terms of looking at various ways to improve cross-border payments there are a lot of known frictions and long-standing frictions in cross-border payments, and I think new technology and new innovations and new ideas and new players have kind of elevated finding solutions to cross-border payments as a necessary component of the future of the payments ecosystem globally. And so similar to what Antoine was saying, is that central bank digital currencies could be a solution. There could be other solutions. I think the work that's happening from the G20 on cross-border payments is looking at a whole host of possible ways to provide solutions, from implementing some changes to existing infrastructures to looking at the future of things like stablecoin, central bank digital currencies, platforms on which multiple central bank digital currencies could operate, but also very sort of foundational, familiar enhancements to very familiar technologies as well. So everything's on the table at this point.
Yeah, and I would just add that it doesn't necessarily have to be one body. You could think of currency naming standards. You could think, which may not be the same as they are today. You may think of messaging standards for cross-border technology, identity. So this could be, many different technological, or it could be ISO, W3C, WT. There's so many different players that may be part of this because of the complexity. So I wouldn't think one would have that entire population covered.
Thank you. That at least goes to the heart of, is there one institution that could do that? So maybe the jury's out on that too, but clearly your point is a good one. So let's just see, this goes back to something Antoine said, a question. So how could a CBDC work in the US if it is not a direct liability of the central bank? What would give consumers faith in the currency?
Yeah, so this is a really good question. Again, it depends what we mean. But so the example that our colleagues from the IMF think about is, suppose you allow special purpose banks or special purpose payment system providers to issue electronic liabilities that can be transferred to, pay online and things like that. And you have to back all of that with balances in a central bank account. Now, the stuff that's in the central bank account, that's a central bank liability. But the thing that you hold in that hypothetical example is a liability of that special purpose payment system provider. So according to at least some people who think that a CBDC has to be a liability of central bank, this is not the CBDC. It's a digital currency that is extremely safe because it's fully backed by central bank liability, but it's not itself a central bank liability. So to that question, people should feel extremely confident, especially if those payments, those hypothetical payment system providers are well regulated, so that you can make sure that there is central bank liabilities backing those digital currencies. But it wouldn't be a CBDC. So that's a hypothetical example. Now, there might be other reasons why this is a good model or not a good model, but this is a model where you would have something that's a private sector item, private sector liability that has all the safety or a lot of the safety properties that you would like to have from central bank liability.
And I'll add just a little bit here, maybe a little counterpoint is, there still is, and Antoine's not saying it's risk-free, but there is still some risk, legal risk, or if that entity goes bankrupt, or if there's legal, or if the money is not there, there has to be regulations and audits. So it's like calling all stable coins equal. They're not. Some are backed by US dollars, some are backed by algorithms and crypto. We've seen a failure of one just recently that was, a catastrophic failure for that particular currency. So they're not all equal. I'm not saying they can't act and solve some of the same problems for sure, but it's not necessarily the same with equal footing as a digital fiat central bank liability.
Yeah, so that's a really important point. So in case people, to avoid any misconception, the comments I was making is not valid for stablecoins in general, and it's about a hypothetical model that would have properties that are not currently available for stablecoin. But that's something that we could think about. So that's a very important point. People should not feel like the stablecoin they can currently access are perfectly safe.
And also we mentioned earlier, somebody mentioned about a synthetic CBDC, and there's a question on that is how will the impact of a synthetic CBDC affect the valuation? Would this be run on a two-tier currency system?
So just to, the PBOC's current DCEP, so their current pilot for digital currency is pretty much exactly that, right? So you have commercial entities, commercial banks that distribute liabilities, and those liabilities are fully backed by balances in a central bank account that's bankruptcy remote to protect you from the kind of worries that Jim was mentioning. So that's just one model that sort of is already in existence.
Okay, and here's a question, just a practical question for Dave. How does the Fed solicit the public opinions on this topic?
So we will be issuing this discussion paper later in the summer with access to ways in which to submit comments and feedback. So we do plan to have a bit of a rollout on our website with a link to ways to comment.
Great. And obviously, I think the purpose of the paper, as you said, is to get the public's comment, but also the different stakeholders. So that includes elected officials, as well as other market regulators and participants. A question that's come in for Jim, if you could talk about the cyber risk coming with quantum computing hackers.
Yeah, so I mentioned what we build has to be flexible to handle future changes, be they policy, but also quantum computing. And so if there is, a quantum computing capable system in the future, whatever cryptography we're using could potentially be at risk. So one thing we would not do is sort of hard code the cryptography into the actual platform. It has to be modular enough so that we could swap out and move to newer technologies that would prevent that particular risk to the system. And I think that goes through, many outside of even CBDC to many technologies have to be thinking about that as, a flexibility component.
Certainly.
I'll answer one more question if I could, Patricia. You asked before, can I go and buy a Coke at the store with it? So just once again, this is theoretical, but these systems exist today. Just think of going to the store and they have a QR code exposed. You put your camera up to it, it picks up the information off the QR. That gives you the digital information about where do I send this money, how to represent this money as for the store. You have a wallet in your phone. It signs a message and sends it to either the Fed or a payment service provider or a bank that then sends it to the Federal Reserve that will clear and settle that transaction. So it's relatively straightforward. It's really about how do you do it at scale and how do you do it so that you don't have 17 different ways to try to pay for something at a store that hopefully is more consistent, much like with credit and debit cards, there are standards that talk about the formatting of things. We'd have standards that talk about the formatting of the data that you get to pay the store, the gas station, or even a person. So it's the simple part is not the technology, it's really getting consistency and making it future-proofed.
Thank you for coming back to that. And here's a related question that's come in, and that is, should retail CBDCs interoperate with existing bank card and payment schemes, likewise sitting on MasterCard rails? Is this needed for consumer adoption?
I guess I'll start with one statement. I think Dave may have some others. Interoperability is, and I should say, there are many slippery terms in all of this. Token versus account is an oversimplified set of terms. And interoperability. So if you mean I can take my CBDC and send it over a rail, I don't know what the answer to that is. Or, are there intermediaries that could move my money out of my bank account into a CBDC and then over FedNow? Well, intermediaries can do that. Today you can move money out of your account into other products, a debit or credit or other ways, because intermediaries act as, agents between systems. So you could say that, a bank could take money out of your account and put it into a CBDC, and then take that CBDC money and move it over FedNow, for instance, or some other system. So interoperability is not a single definition. So I'd say at some level, it would be better if they are interoperable, but I don't know if it means that we actually have to be able to move CBDC over, different rails. I don't know if that's necessarily as much as having intermediaries allow for, easy access and sort of a ubiquitous way of moving a CBDC, but not technical interoperability. I'm not sure if that's necessary.
Okay. Did anybody want to add to that? Dave, Anton or Dave? Did
I would say, I think these are the kinds of questions we are prepared to pose as a discussion questions, because I do think, getting the broad range of perspectives on what folks in the private sector, what some existing providers of financial services, how do they see the roles that they would play? What do they see as the need and demand? I think we're very interested in hearing those perspectives.
Great.
So just to add to that, I'm going to broadly restate what Jim and David said, but in slightly different words. In payments, it's really important to keep separate the front end, what retail, you and me face, and then the back end, which is a complex infrastructure that leads to clearing and settlement. So clearly, the objective should be for consumers to have the most simple front end, so that if there is introduction of CBDC, it doesn't conflict with other things they want to do. And then the question is, how do you make that happen in the infrastructure in the back end? And these are the difficult questions, both policy and technology, that we're trying to think about. But I think people should feel comfortable that all attempts will be made to have the most convenient front end for retail customers to use.
Thank you. I'm sure that'll be reassuring for a lot of the users in the space. A lot of questions have come in about FedNow. I realize we're closely running out of time here, but since that's also been mentioned as a tool, as something that you all are working on, how do you see this impacting FedNow? And maybe you could just comment on any link that might be relevant with regard to that project.
Yeah, I guess I would just say that as we think about this, we see them as complementary. There are many use cases, there are many different choices consumers and businesses have. So I see this as one more option for people to decide, how do I want to store my money and move my money? FedNow will be, one great opportunity, obviously, and there are others. And I see a CBDC myself as just complementary to that system. Obviously, this, as I said before, this overlap in use cases. I can walk into a store and pay with cash, debit, credit. I'm sure someday with FedNow or CBDC. That doesn't mean that there's cannibalization or they can't coexist. So we see it just as more choices for consumers and businesses.
Yeah, I would add, FedNow is clearly in the domain of infrastructure improvement, and that in an infrastructure there is sort of first and foremost the goal. It's obviously a system that can be leveraged by a full range of financial institutions and sort of help as another access point for various types of transactions in the retail payment space. when we talk about CBDC, I mean, one of the things I think is what differentiates is we're talking about the quality of the asset. We're talking about the underlying assets. We're talking a bit about expanding the range of what an asset, a central bank liability could be that complements a lot of what is currently exists, and complements, not replaces. And so you cannot fully disentangle what an asset, a central bank liability from infrastructure fully, because they are interrelated, but they are a bit separate. And so, like Jim said, I think it's important to know that that complementarity exists with FedNow, but also with the other systems, as we just discussed.
Thank you for that clarity. I have probably 20 more questions in front of me, both my own and that have come in from the audience, but we are sadly out of time. I have to thank you all very much for lifting the hood, as you said, on a lot of the different and complicated but related issues that need to be addressed to solve this. So you all have a task in front of you. I guess we as the public also have a responsibility, given the opportunity to opine on this, especially all the current players in the system who will be in the ecosystem who will be affected by this. But I'd like to end on an optimistic note. I think that in this process, one of Jim's collaborators, Neha Narula at MIT, I think at one of the hearings on this recently said that whatever happens, that these technologies are really ushering in a whole new era of innovation for payments. And that at the end of the day is probably a very good thing. I loved what Jim said, which is you're really building something for the next 100 years, all the work that's going on now. So hopefully all this collaboration and effort will indeed set the groundwork for some great progress in this area, and we will all be watching closely. So thank you very much for your time today, for your thoughts, for your efforts. We're very much looking forward to these papers coming out and the opportunity to participate further with some thoughts. So thank you again, and good day to everyone. Before we close, sign off completely, just let me remind you, we have another interesting session tomorrow, which will be the 4th session in Fed Week, where we will have Federal Reserve President Patrick Harker and Raphael Bostic speaking about building sustainability and equitably. So thank you very much and have a good day.
Thank you.
Thank you.
Thanks, Patricia.
Thanks.